Good afternoon. You're watching Businessworld Live here on One News. I'm Jess Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. Okay, correction. It is Tuesday. I'm getting ahead of myself there. But as always, let's have a quick check first of how the main index performed today. You have the PSCI inching closer to the 7,000 level. It is up today by 0.3% to 6,981. This as inflation slowed to 4.8% in September. That's compared to the 4.9 clip that we had back in August. More details on that inflation figure later on in the program, but still the slower uptick is due primarily to lower increases in food and non-alcoholic beverages as well as transportation costs. More details on that as well later. But here's one other risk to inflation: oil prices that has risen big time over the past days, pushing the energy department to direct oil companies to ensure sufficient supply and work on possible workarounds to control possible price hikes. Now, oil firms must comply that at the minimum, they have an inventory which can last 15 days, while refiners need a 30-day buffer or crude oil and for crude oil and refined products. According to the DOE, we have the high demand as well as the lack of supply from the OPEC, as well as increased activity in the last quarter of the year. That all things considered could actually jack up oil prices in the coming months. Now, looking at the prices here of some of our oil players here, all of them, in fact, ending the day in the green here as oil prices start to increase. You have Filipino Shell now at 20 pesos a piece. That is up by as much as more than 3% here. Also, you have Phoenix Petroleum increasing in the day as well. It's now at 11 pesos and 96 centavos. Same thing with Petron, making huge gains today, now at 3 pesos and 39 centavos a share. Now, looking at our leaders and laggards here, you'd see here some stocks with huge gains here. Primarily, you have Robinson's Retail extending its gains for a second day, surpassing gains it had on Monday. It's now up by 5.3%. Same thing with Converge, ending the day in the positive territory. Globe, likewise, also up by 3.8%. Now, off to Semirara we go. This time around, halting its four-day rally. It's down today by 0.6%. Even as Chairman Isidro Consunji says that coal prices will remain elevated until the first half of 2022. Semirara on Tuesday ended at 23 pesos and 80 centavos a share. Former Senator Bongbong Marcos is joining the presidential race in 2022. Marcos officially announced his bid just a few minutes ago. Earlier in the day, Marcos took an oath as member of the Partido Federal ng Pilipinas, or a three-year-old party that has earlier nominated him for the top position in the government. Meanwhile, more aspirants are expected to file their certificates of candidacy within the day. But as of 12 noon, only a few personalities have lodged their COCs at the Sofitel tent in Pasay City, mostly for legislative posts. Among them is Larry Gadon, who is for the third time attempting to vie for a Senate seat. The TGP party list is also eyeing another term at the House of Representatives. Former Senator Antonio Trillanes was also spotted earlier today at the COC filing venue, but only to accompany a nominee of the Magdalo party who is vying for a seat at the Congress. Trillanes said he will file his COC on the last day, October 8th, should Vice President Leni Robredo turn down her nomination. The United Nationalist Alliance has meanwhile announced the senatorial bid of former Vice President Jojo Marbinay, but the official has yet to announce when he will formally file for candidacy. House Speaker Lord Alan Velasco has meanwhile filed his certificate of candidacy for representative of the Lone District of Marinduque. Velasco is gunning for his third term in Congress. Here are other headlines we're keeping our eyes on. The NEDA said government policies easing food prices, including executive orders on pork imports, helped slow down the rise of inflation in September. Socioeconomic Planning Secretary Carl Chua highlighted the slower pork inflation recorded last month, which he said was the result of the government's proactive implementation of policies aiming to stabilize pork prices. Chua was referring to executive orders that increased the minimum access volume of imported pork and reduced pork tariffs, which local hog raisers feared would cripple the industry. Recall that pork inflation went down to 36.4% last month from the 39% recorded in August. On the other hand, NEDA also touted efforts of the Agriculture Department to stabilize fish supply in the coming closed fishing season. The DA has issued a certificate of necessity for the importation of small pelagic fish like kalunggong with a maximum importable volume of 60,000 metric tons. The NEDA says government interventions need to be recalibrated to bring down food prices further. The Japan Center for Economic Research maintained its growth forecast for the Philippines at 4.3% this year as optimism for a better fourth quarter persists. JCER's forecast falls within the government's revised GDP growth target of 4 to 5% for the full year 2021. The Japan based think tank notes that some economists still believe that the Philippine economy will see positive growth in the last two quarters of the year. Of the six economies included in JCER's quarterly report, it was only in the Philippines that the think tank retained its forecast amid downgrades for the rest of the other countries. Amendments to the Retail Trade Liberalization Act are still up for the president's signature, but that's more or less a done deal. How exactly will the changes affect the investment climate in the country? We have on the show Lars Wittig, president of the European Chamber of Commerce of the Philippines. Good afternoon, Lars.
Good afternoon, and thank you for having me back.
Thank you for joining us. Okay, so your comments first regarding the amendments being passed here by the legislative branch on the Retail Trade Liberalization Act.
Yeah, first of all, we are extremely delighted to see this finally passing. It has taken 21 years to be exact to have these changes made, and there's much to be celebrated. Yes, it is a giant leap, not only for foreign investors, but very much so for Filipino consumers who will see many more choices and much more competition, which also means better prices.
Okay, we're all for competition here, but there has been a notion that these amendments, especially considering that it's going to lower the minimum paid up capital for foreign investors, there's a notion that this is going to hurt local businesses. How do you respond to that?
The concerns that generally have been expressed have been on behalf of sari-sari stores. And that level is really not who will be competed with. The barrier now has been lowered to $500,000 paid up capital just to enter the market, and then as much as 200,000 for every branch that you open.
Mhm.
So let me just make clear to begin with, it is definitely not sari-sari stores that we are competing against as foreign investors. But what it means is that many more foreign retailers do not any longer have to partner up with local retailers. They can afford to go in on their own. Local major retailers will, of course, not be interested in partnering up with a business that is to a high degree competing with their own existing interests. So now that separation has to a much greater extent been ensured, and we can see and expect many more European and other retailers entering the market on their own, and I think that will only benefit all.
Mm-hmm. Okay, one interesting point here. Again, the minimum paid up capital being lowered to 25 million pesos is not going to be competitive enough, especially when you compare it to the rest of ASEAN, where in prices capital requirement is even lower. How is this going to improve the investment climate in the Philippines, considering that?
Well, there's no doubt that cutting it with 80%, to one-fifth of what it was before, that is, of course, a big easing relative to the barrier that was before. It is still very high, but it's also important to see that this is up for review not every 5 years, but actually every 3 years. So have we crossed the finishing line yet? No. Have we brought it to a level where we are more at par with the other ASEAN countries? Not yet, but it is still a giant leap in the right direction.
But given as well that we're still in the backdrop of a pandemic here, are we really expecting to cop huge investments from these amendments?
No, but I mean, we are expecting to be coming out of this pandemic now, right? And we're already discussing whether we should ease the level of restrictions from level 4 to level 3. And I don't think anybody realistically expects that we will go backwards again to what at least previously was known as ECQ. I don't know whether we still would call it that, but hopefully we will never have to refer to that term again. So there is light ahead, and consumption will resume. We are entering an election year. We know private consumption, domestic consumption goes up during election year. Of course, it's still enticing. It's a huge market here.
Now, let me be more direct here. For the European Chamber of Commerce, has these amendments in any way sparked interest from European investors?
I can guarantee you that European investors who already have entered the market have welcomed it. And I have direct positive feedback from several. And we're also very familiar with foreign investors who were investigating to exploring whether or not to enter this market and just found the barrier to be too steep. So what I expect that we will see moving forward, we're all very familiar, of course, with IKEA opening, and Zara is here, and H&M is here, and so on. But I think we will see many more of these stores on their own, as well as perhaps entirely new areas such as groceries. That's also an area where in other ASEAN countries you actually have especially European retailers in the marketplaces. That could also happen here.
Okay, that's exciting news considering that these are new areas that investors are exploring here when it comes to the Philippines. But one other big concern here, like you already alluded to this earlier, it's election season now. What's the current political climate? How's that affecting sentiments here from investors?
Well, in regards to the acts that the bills that are pushed to be passed before the election, including this RTLA Act, the president has given it absolute priority. So it is being pushed very, very hard forward. And yes, it is an election year, and yes, investors like to have predictability. So of course, it is important from a European investor perspective that we can trust that many of these excellent efforts will be continued in regards to minimizing red tape, ease of doing business, continued investments in infrastructure, etc. Remember, none of this is done by a single government during a term of 6 years. It has to be done by consecutive terms, easily 2-3 different governments before it really makes the difference.
Now, will it be a red flag for investors should there be a change in government, or should there be a change in administration, I mean?
No, not at all. Not at all. But what we always like to see, that is that whoever wins with not a landslide, but something like that, so that at least we don't have somebody questioning whether this was now really the victorious party or not. I mean, there was no doubt with the current government that they won big, and that investors like to see.
Okay, thank you very much again for your insights this afternoon. Again, Lars Wittig, President of the European Chamber of Commerce of the Philippines and the country manager for Regions and Spaces by IWG. Thank you, Lars.
Thank you.
And those are the biggest stories this trading day, October 5, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess Delos Santos and we are One News. Mask on, wash hands, and stay safe, Philippines.